morning. And it's our big pleasure to welcome Rob Lees from Mortgage Choice once again. Hi, Rob.
Hi, Peter. How you going?
Good. How are you?
Good, thank you. I don't think I've got any sound here.
Oh, I can hear you.
Okay.
Maybe I'll turn you up
I
on
can't hear myself.
Does that sound better?
No, that's okay, but I'll be fine.
Yeah. Well,
As
you're
long as you
working
can
in
hear
my
me,
ears,
that's the
so
main thing,
yeah.
Good to be here again.
Thank you. Yeah,
Hi, Rob.
welcome.
Hi, Julie. How you going?
Good. I'm a fill-in today.
So we're talking about strategies to get that damn mortgage paid off as quickly as
That's
possible.
Right. Everyone wants to pay down their mortgage faster because we see those repayments and they're big repayments, and we start to think, you know what? If we didn't have to make that
I
payment,
know. How much money would we
how
have?
much extra cash should we have? I mean, wow, all the options available to us.
Great environment to do it too, with low interest rates.
That's right. Absolutely. Yeah.
So tell us, are there particular types of mortgages that allow us
strategies.
to...
Let me go through those strategies.
Okay.
So I've listed about 7 here. So let's just run through them really fast.
Yeah.
The most important one is to make extra payments, and that's obvious, particularly given that we're in a low interest rate environment. And if you can pay just a little bit more than the minimum payment, it makes a big difference. I worked out last night, if you had a mortgage of $450,000, the repayments, say at around 4%, is $2,150 per month. If you rounded that up to $2,500 a month, so about $350 per month extra, what's that, $80 a week or $90 a week extra, you pay the mortgage off in 22 years.
Wow.
So 30 years down to 22 years, that's 8 years.
Yeah. And that's 8 years closer to retirement.
That's right. So it does make a difference. That's probably the most important thing. The other thing that you might do is to get a loan product with an offset account. And a lot of people aren't sure how offset accounts work. It's an everyday account that is linked to your home loan. An offset account doesn't earn interest, but it saves interest at home loan rates. So if you had about, say, $20,000 sitting in an offset account, you'd save roughly about $1,000 a year in interest. And again, all of that adds up and gets your home loan paid off faster. Also, low interest rate environment, the banks are battling each other for the best, most competitive rates, so make sure you're on the lowest interest rate possible, because you do get left behind if you don't review it regularly. The banks just keep going lower and lower and lower. So I encourage my clients to talk to me once a year, and let's review it. Let's try and get a bigger discount. Because, again, the lower the rate, the bigger the savings.
You don't ask, you don't get, and the banks are not going to knock on your door to offer you something better.
No, they hope you won't notice.
Yeah, that's
don't
right.
They hope you don't notice, but we want to notice. We want to make sure you're on the best rate. You could make weekly or fortnightly payments. That can also get you ahead faster. Another strategy that a lot of people don't think about is sometimes buying an investment property can get that loan down faster too.
There you go.
So if you use the equity in your home to buy an investment property, over time it may gain value. You can sell it and put a big lump sum down on the mortgage. In fact, that's how I paid off my first ever home loan.
Yeah.
I bought an investment property in 2002, doubled its value in about 7 years, and we sold it, and the lump sum was used to pay out the mortgage, and then my wife got ideas and we ended up upgrading, and we still have a mortgage.
It's funny that you say that, Rob, because that is exactly my strategy, is to have the investments earn enough to then sell them off, pay down the home, and then continue the investment process, but at least you've got no home loan.
That's
Let
right.
me tell you, that was the most fantastic day of my life when I paid up my home loan.
Yeah, I bet.
And that's why we all want to pay it down faster. So there's that one. And the other one I was just going to mention is consolidate unsecured debt. So if you've got personal loans or credit cards and you're paying big interest rates there, get it together, put it all together on the home loan if that's possible at a lower interest rate, and whatever you save on your repayments, keep paying that same amount, and again, it's going to increase your home loan payments and pay it off faster.
Absolutely. And you can even get a little bit creative with those personal debts and put them onto shorter terms, but at home loan rates while they're so cheap, can't you? There's a lot. I mean, the key is to talk to you, because there's a lot of options.
That's
that
right. Talk to a mortgage broker. There's so many strategies, and it can be tailor-made for each individual.
Yeah.
So, Rob, are there any issues that I need to be aware of in pursuing an accelerated payment strategy?
Look, the main thing is to have the right product. So a variable product allows you to make extra payments. If you had a fixed rate product, there's restrictions on extra payments, and then if you make those payments, you can't redraw them back out. So particularly if you're going to lock in a fixed rate, I always recommend you don't put all your loan into a fixed rate, because you're not going to have any flexibility. So you might split it and at least have some of it as a variable rate, and then maybe have that variable rate linked to an offset account.
Okay.
Yeah, good advice. And so what about, the main benefits of paying a mortgage off faster versus, say, if I've got extra money and I want to put it into some fixed term investment or put more money into super? What's your advice there?
Yeah, for a lot of people, it actually, if you model it, for most people, it'll work out better to, particularly if you're over 50, and that's Julie and me. Peter, you're not quite 50, are you?
I'm not.
She's the
She's
young,
got a little way to
the
go,
young lady here. But particularly once you hit 50 and you're not too far away from that retirement period, it's probably more tax effective to put your surplus income into super rather than putting it into lowering the home loan. And the reason is if you salary sacrifice into super, you're only going to be taxed, or that income's only going to be taxed at 15%. Whereas if you're going to pay it off your mortgage, you're going to be taxed first. If you earn over $38,000 a year, you're paying 35 cents in the dollar tax, 35%. If it's over 80, 39.5% in tax. So it's more cost effective to build up your super, and then when you retire or when you turn 65, take a lump sum out and put that onto the mortgage to pay it down.
So there's a number of strategies that you can do. Because do you find your clients tend to, I find when I'm talking with people sometimes 30 years, it just feels like forever, doesn't it? So they're kind of just plodding along.
It's just too long.
But there's so many strategies that you can do to sort of get rid of it much faster. And like you said, the surplus cash that you're going to have at the end of the week, if you can get rid of that as quickly as possible.
It all comes down to using surplus cash, trying to have surplus cash or savings, put it on the home loan.
Yeah, and like you said, the offset account, I mean, that's you're not saying goodbye to it forever. You can get it if you want it, if you're saving for a holiday or a car.
I guess just to mention, particularly for paying down investment loans, let me say this is very important. For if you only have an investment loan, not an owner-occupied loan, it's probably better not to pay that investment loan down, but to have it linked to an offset account. And I always recommend people with only investment loans to have an offset account, because if you pay down the investment loan and then you redraw it back out for for personal purposes, it's no longer deductible, that portion that you draw out. So it's better to build up the offset account. You're saving interest, but you can still get access to the cash and still maximise your tax deduction.
Well, you're talking about 30 years. I think the way I always looked at it was I needed somewhere to live. And
we all do, don't we?
Better to be, building something for yourself than to be building something for somebody else.
Absolutely.
And hence, when you enter it, it's not like for me, it was never like a restriction. I just saw it as, I would have been paying for it anyway.
Yeah, absolutely.
And I might as well be paying my own. And having had a mortgage for 28 years, I'm very glad I don't have one now.
And the thing is, too, some people nowadays, the strategy, because, the property market's so expensive, a lot of people are considering that, rent where you want to live and buy investments, so long as you're doing something with your money and investing
that's what my son's doing. I've set up a loan for him on the weekend, and he's living where he wants to live in the country.
In the country?
Yeah, he lives at Orange, and so he's buying an investment property in an area that is going to have
some capital growth.
Some good capital growth for him.
Yeah. Fantastic, Rob. As always, very informative. We're so appreciative of you coming in every fortnight to share your wonderful advice.
And, talking to Rob, I just thought we might talk about the fee-free courses at TAFE, because Rob's teaching the financial management course. And so...
Yes, so for those of you who don't know, the Chamber has an initiative that we've aligned ourselves with TAFE, and we're providing fee-free courses that there's 4 modules that actually go towards building yourself a credibility towards a small business diploma or Cert 4. And we do have our orientation for that on the 10th of October.
Yes, and you need to book in.
Yes.
If you are intending to do this course, if you have a read about it and you're intending to do the course, you must book into the orientation session, because the places in the course will be given to those that have booked in.
That have pre-registered. So there's information in the Gazette this week. There's also information on our Chamber Facebook page. But you're 100% right. They need to go to the chamber.org.au page and then click on the events. And you just, they as we mentioned, they're fee-free. So you just zero in at the cash component, click register. That gets you in there. And then, Julie, you'll be in touch with some more information around orientation.
And there's also a flyer on there explaining what it's about.
So thank you, Rob, for are assisting the Chamber with that. It's greatly appreciated.
Looking forward to it.
Yeah.
And we'll also we might give you another bit of a plug. We're going to see you on Wednesday night at the finalist cocktail party.
Absolutely. Yeah.
Congratulations on being a finalist
Thank you.
again.
Yeah.
And what we're talking about are the Blue Mountains Business Awards, the
We
10th
are.
Business Awards
Yes.
that Rob has become a finalist in.
Yeah, and last year I think from memory you took out a crown.
Yeah. The Small Business Excellence. So
Fantastic.
see how it goes
So
this
that's
time.
the one that gets you through to the New South Wales
Yes, that's
Chamber.
right.
Yeah,
That's
how did
right.
you go there? Any luck?
I was knocked out there.
Oh.
That was a massive
Hope you weren't
event.
beaten by another broker.
No, absolutely not. No, no.
Fantastic.
No, it was. But there's, I don't know. There must have been thousands of people there that night.
Is that
It's the New
right?
South Wales State
Yeah,
Awards.
it's a huge event.
Yeah.
Yeah.
Well, there you
But it was
go.
good to be there.
Fantastic. Well, that's our show. Again for another.